Inflation rates have declined, and you look at this basically all around the world. We have seen numbers coming out from the government saying inflation is going down and people are celebrating. But is this really something to celebrate? You see, when you look at inflation rates, it's not as if the prices that you pay are going down. You go to the store, that whatever it is didn't actually decline. You see the price increase year over year or month over month, depending on the statistics they show you, going down. That's what's going down. And you look at it, I mean, it depends on the basket of goods that you are purchasing and so on. But in time, we start to realize the truth. The first thing I need to look at is the inflationary deflation. What? I'll make sense of that in just a second. We're going to look at both sides of this. The second thing is what could make change. I'll give you this as well, because when you look at that one thing that's going to make a difference, this is where we need to look. It's very important. And the third thing is a major policy error. I'm going to give you all of this information that will make sure that you are informed for 2023. You don't want to miss it. Let's begin. So let's start right here. South Korea trade data shows export slump is persisting. It is very important to watch South Korea. Many consider it to be a bellwether or a warning sign for what's to come in the global economy. And that's important. We could see all that shipment that has been coming into the ports. I believe I have that chart set up for you. The ports at LA Long Beach, these have declined significantly from, looking at it over the past couple of years, how crazy that's been. And these are just things that we gotta be paying attention to. Look at the different indexes that are around trade. Things have slowed. We know that to be the case. And this is during a time like Q4, we always see these things increase. Why is that not the case today? South Korea's early trade data showed a decline in exports persisting this month in the latest sign of a global economic slowdown. So I can just give you the chart that just breaks it down. Exporters are worried. Korean exporters are most worried about global economic slowdown, just basically breaking that down about supply chain issues, logisticals, and the global economic slowdown at 21%. I think that's important when you can see how much of an impact that trade has on an economy. It is really, really key. So that's why I always show you this data, whether it's from Freight Waves or whether it's just something else that I pulled up. You need to look at what's happening with commodities as well. This is with food. I had some other ones and it was just too hard for me to get across. I mean, talking about famine and things, I didn't include it, okay? I'm just gonna show you this. A global food crisis, 2023, another year of extreme jeopardy for those struggling to feed their families. The numbers are insane. Conflict, economic shocks, climate extremes, and soaring fertilizer prices are combining to create a food crisis of unprecedented proportions. As many as 828 million people are unsure of where their next meal is coming from. And we look at that, I mean, billions of dollars are going in one direction, trying to help people, feed people, but it doesn't seem to actually get to them. I don't know what's going on with some of these institutions. Could be some corruption, could be other problems as well. I don't know, but I've never been in this circumstance, and I just highlight it. I just want to show you that, because what happens when you have here we go. What happens when you have hunger? You have civil unrest, and that will affect a lot of people. The number is growing, okay? It's supposed to be getting better. There's more money created than ever before. They printed literally trillions of dollars globally, and it's not getting any better. What about in the US? You could look at the US Drought Monitor. This is a map release. That was January 12th, so it's fairly recent, just showing you that. And of course, that's going to be a problem for all of that growth. We need to have crops. We need them to develop. We need the farmers to get this stuff onto the store shelves or export it. And if not, what do you have? You have upset people. You have people who can't eat. And that presents a problem, of course, because inflation is trying to come down, and there are certain things that are just very persistent. Harvested acres has declined as well. We haven't looked at these numbers since during the financial crisis timeframe. I thought that was interesting. It depends. A lot of that is speculation. I just want to make that clear. A lot of the price action on any particular commodity, or you look at an index, it is speculation, but there's real stuff behind it too. What the latest warehouse data is signaling about inflation and the economy. As supply chain inflation has slowed, national warehouse storage rates remain elevated, but did not rise quarter over quarter to end 2022. I was finding this interesting, just with my own business, importing a lot of products, trying to sell those products globally, and you see the conditions and how they are affected in one place versus another, and it's just, and in a time in which we've seen retail sales slow down, it really depends on the type of product you sell. So this is why I always tell people, I posted this on my Twitter, basically to say, if you want to do well in a recession, you have to do one of two things, and that is cater to the wealthy people who will not be affected or not affected as much by a recession, or you can sell a product that people buy and it saves them money. I'm not telling people to do this product, but I'm just making the example of Tupperware. Tupperware, yes, it costs money, but now I'm bringing my lunch to work, for instance. Okay, that's the way you got to look at things. This is a drop in imports pointing to lower inflation. This is the one I said that I loaded up. Port of Long Beach imports. Weird. Just so weird that during the fourth quarter, imports declined. I mean, it's just absurd. And it wasn't as if it was just this one anomaly. The way it happened, it shows us that there's a definite demand destruction that's going on. But what about this? It's not the rabbit, but the $175 billion elephant in the room that may overshadow this year. That's the amount of distressed debt the global property market has piled up. Wow. Now they're showing a picture of Evergrande in China, which I've talked extensively about, but it's not interesting. $175 billion of distressed debt. You're increasing interest rates. That's becoming, it's like a balloon. You just blow that balloon up, and what happens? The further you blow it up, it goes, and then the balloon is getting thinner. The balloon is getting thinner. Everyone's watching, saying, oh, how much more can we go? And then pop. The only thing that would change this tune is to reduce interest rates. How long do we have to wait for that? Only time will tell. Now, I wanted to just show you just one thing really quickly, okay? This is the reopening coming with a $720 billion inflation bomb. You stuck with me through that part of the video. I needed to show you what's happening in the economy, then to describe this. China's reopening comes with a $720 billion inflation bomb. What are they talking about here? Well, it is the amount of pent-up savings that they expect are simply sitting there because of China and the fact that they've been locked down for like 3 years. So of course, they have this cash that's sitting there waiting, just waiting to be spent. Now it all depends. We will see how this goes. Okay, whether that's actually the case, we don't know. We don't have the data exactly, but you lock people down for 3 years. You look at the luxury market, even a lot of times you'd have the Chinese buyers really showing strength for, let's just say Rolex, and let's just say Louis Vuitton. All these different companies, they've said, we have lost our Chinese market. So if that's the case, listen to me please, investors or just people interested. If that's the case, there's going to be a huge spree here in 2023 coming out of China. Doesn't matter about 720 billion or whatever. Watch it carefully. We've already gotten past the bottom point of the stock market, at least near term, for what's going on with the Chinese markets, tech stocks specifically. We'll see what happens in the coming days and weeks. I wanted to show you that here, looking at the net increase in China's household saving deposits. So, over the years, we can see that, it's been within that range, but suddenly 2022, that just spiked up and gives you an idea of why this is very important, because you could see that it's a trend. Yes, people haven't been able to spend the money that they did previously, but you can see that companies will be able to benefit, real estate potentially benefiting, and inflation going real high. So what, in fact, would happen if China starts this mass buying spree around the world? Wouldn't that be another reason for the Federal Reserve to keep interest rates elevated for an extended period? Interesting, right? Let me break it down. China's reopening after 3 years of lockdowns could potentially be inflationary for several reasons. One is pent-up demand, which occurs when consumers have delayed purchases during a downturn and then spend more once the economy improves. This increased spending can lead to higher prices as businesses raise prices to keep up with increased demand. Also, Chinese citizens have accumulated savings during these years, and as they begin to spend those savings, it could add to the inflationary pressures. The impact of China's inflation on the global economy is likely to be significant, as China is a major player globally, and its domestic inflation can lead to higher prices for goods and services that are exported globally. Note that if China's central bank raises interest rates to combat inflation, it can lead to capital outflows and a stronger Chinese currency, which can have negative impact on the competitiveness of other countries' exports. Watch closely as to what China does, as it will have an impact far and wide. Now let's get into the next aspect. UK inflation rate dips for the second straight month to hit 10.5%. As I said at the beginning, you made it this far into the video, looking at it, you will see that there are so many different inflation, like you can measure it in different ways. A lot of them have been declining. Okay, that's all I'm trying to say. Still very high though. The UK is really suffering as a result. Fed Governor Waller backs quarter-point interest rate hike at the next meeting. He's not the only one. Basically, every piece of data that I have seen is looking at 25 basis points for the Federal Reserve at the next meeting. That's it. So it just shows you that they are ready to change their tune. That's very bullish for risk assets. They're already looking ahead. They don't even care. They're not even worried about the fact that, you know what happens if inflation comes back? No, not a concern. So we'll see as a result of what goes on with China and the Federal Reserve and their activities and inflation rates. What are they going to do? Well, according to Jamie Dimon, he says that rates will rise above 5% because there's still a lot of underlying inflation we need to see in time, but I wanted to show you that, and it goes on everywhere all around the world. Look, the European Central Bank, the ECB, says that the market is mispricing rate hikes and expects more to come. This is unbelievable. I mean, because we had such a struggle for inflation in Europe, and now they're saying, you know, way too much inflation, we need to stop that, we're going to increase interest rates, and this is no doubt. I mean, look at Europe. It is really suffering for many reasons right now. I mean, the demographics are terrible, a lot of issues going on. In hindsight, I love this one. This one's here for just my true fans. In hindsight, monetary policy everywhere was too expansionary, according to the Swiss central bank chief. Can you believe that? We printed too much money. Can you believe that? Let me know in the comments, please. Let me know. Too many people stay silent in my comment section. You know, look, come on. This is hilarious. As far as I'm concerned, this is hilarious. You know, then we look at the Bank of Japan, which is a completely failed policy. I mean, like we look at the monetary policy, this is disgusting. Bank of Japan defends yield curve controlled measures, intends to stick to ultra easy monetary policy, said they will do it. I've seen many quotes, multiple quotes coming out of the Bank of Japan saying, we're going to print more. We are not stopping this at all. We are committed to buying every single asset in Japan. They're buying all the bonds. They have more than 50% of the bonds. And they're going to, I guess they're going to buy all the stocks too. That's great. They're the only investor left. Do you want to be there? Do you want to be that one that's hanging out with them? Well, that's up to you. So here we have it. You have to watch what's happening with China. How do you do that? Like, how can you be certain of that? All you gotta do is hit subscribe. When you do that, I will notify you. You're gonna get that information. You just gotta check in every day. They're not gonna notify you through your notifications, by the way. This channel doesn't happen for most people. So you just gotta check in every day. Every single day there is a video. You can watch me there. And I'll bring the latest and greatest information to you usually before anybody else does. So if you want all of that, hit that subscribe. I'll see you tomorrow. Take care.